Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday 20th of February. I'm recording the video 10 to 4 p.m. Eastern Standard Time, Thursday the 20th. I was expecting downwards movement. I was expecting that we've had a trend change and the start of a third wave. That's how the session started, with a little bit of downwards movement, but that's not how it's ending. Upwards movement that's ending the session looks like a little second wave correction. Price remains below the invalidation point, and we have a green candlestick for today's session on the daily chart. Although it's green, that candlestick is nicely out and below the lower edge of the channel around the upward zigzag of -2 on the daily chart. We now have a really clear trend channel breach on the daily chart, giving me a little bit more confidence in the wave count. The trend remains down. I'm expecting we've just started a third wave. The target is still 1665, and that's still about 3 or 4 weeks away. We'll have upwards corrections along the way. At the daily chart level, the wave count remains the same, and here's our very clear trend channel breach. This candlestick is outside and below and not touching the lower edge of this channel. I expect now that this is where -2 has ended, and we're still in the very early stages of a third wave down. On the way down, expect price to find support, and then following that resistance at these two aqua blue trend lines. Draw the first lower trend line on the weekly chart, or squish up the daily chart, around the first two lows within primary wave C, and then place a parallel copy and push it on up to sit on these lows or slightly below them. And these two trend lines are showing us very nicely where downward movement is continuously finding support. I expect that the momentum of this third wave should be strong enough to break through support of these two aqua trend lines, and if that's what happens and we see those trend lines breached, at that stage I will have a lot of confidence that we have had a trend change up here at cycle degree. While price remains above this lower aqua blue trend line, we must allow for the possibility that my wave count is wrong and that we may yet see new highs. Further movement below 1646.47, that's this low here, would give further confidence that we have had a trend change up here at either cycle or intermediate degree. Eventually, if we see the lower edge of the maroon channel, which is copied over here from the monthly chart, breached, at that stage I will discard the bullish alternates, and this very bearish wave count would be my only wave count. This wave count sees a huge supercycle second wave expanded flat correction. Within the expanded flat, the B wave is just over here. The C wave may have just begun. C waves of expanded flats normally move price substantially beyond the end of their A waves, so this one would be expected to move price substantially below cycle A at 666.79. At 454.15, it would reach 1.618, the length of cycle A. I would expect cycle wave C to last 1 to several years, most likely 2 or 3 years. Let's have a look at the end of minor wave 2 up here. On the hourly chart. Quickly before we go there, we have a 5 and a very deep 3. That looks like a bigger fractal of this 5 and this very deep 3. We have a really clear channel breach of this channel containing minor wave 2, and on the 5-minute and hourly chart, this downward movement looks best as a 5, and this upward movement looks best as a 3. I expect this is yet again another deep second wave correction, and at the time of publication it's really close to completion, or just looking at the 5-minute chart now, it may be just over. It can't move beyond the start of 1 above 1847.5. The target at 1665 is where minor wave 3 would reach 1.618, the length of minor wave 1. On the way down, we'll have corrections. Look for price to find support and resistance at those aqua blue trend lines on the daily chart. That may be where we see second and fourth wave corrections along the way down. For now, the trend remains down. At the daily chart level and monthly chart level, this wave count is very bullish. It differs from the main bearish wave count from the low at 666.79. This bullish wave count sees the correction is over there as a briefer, expanded flat correction. After that, it sees a new cycle wave 5 beginning there to last 1 to several years. It's already lasted 4 years, 11 months. Within it, primary waves 1 and 2 are complete, and within primary wave 3, intermediate wave 1 may have been over here, and we may be seeing a 5-3-5 unfold downwards for an intermediate degree second wave correction. At 1735, minor wave C would reach equality in length with minor A, and it should find support at the lower edge of this parallel channel. Alternatively, if we see this piece of movement instead of a 5, if we look at it as a 3, then it's also possible that intermediate wave 2 is an unfolding flat, 3, 3, and a 5. It could also be a double combination, 3, 3, and a second corrective structure. If we see a new high above 1850.84, which is possible, we must allow that that is possible while those channels are not breached. If that happens, then minor wave B may be moving higher, and it could certainly do that as a double zigzag. I'd move the degree of labelling here down 1 degree and label this WX, and would have a second zigzag to new highs. Although I think it has a low probability, we must allow that this is possible. If minor wave 2 is a flat correction, then the most common type of flat is an expanded flat, where the B wave within it makes a new price extreme beyond the start of A, so this alternate wave count allows for a new high. That's all for me today with your S&P analysis, and I hope that all our members are having a most fabulous day.